Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be looking at a shorter term strategy you can implement using on-chain data using freely available resources on lookintobitcoin.com. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So I know what you're thinking, on-chain data, fundamental metrics, and market cycle charts aren't meant to be used for shorter term trading. And technically that is true. These charts and tools are best implemented on a more medium and long-term investment basis. But I know a lot of you like to trade. So here we've tried to come up with a strategy that you can implement using more on-chain and fundamental data and analysis rather than just purely following price action, volatility, and speculation. So if we scroll down on lookintobitcoin.com, the two charts in particular that we're going to be covering are here, the active address sentiment indicator and the advanced NVT signal. So if we just start with the active address sentiment indicator, now this is tracking the 28-day percentage change in the Bitcoin's price and the 28-day percentage change in the active addresses on the Bitcoin network. Now this might sound a little confusing, so if you'd like a little bit more clarification on exactly how these are calculated, on the Look Into Bitcoin chart, if you just scroll beneath the chart, it goes into a bit more of the maths and formulas behind this all. But as you can see, this is a chart giving a lot more frequent signals than a lot of the other on-chain data tools you've probably seen before. As this is looking at a 28-day percentage based period, this signals fairly frequently based on very quick changes in Bitcoin's price and network addresses. Whereas many other on-chain data tools and metrics usually only give signals every few months, maybe even every couple of years, this is giving signals every few weeks, if not multiple times a month. So this is a very interesting tool to use. And if we just zoom in, we can explain a little more how you could implement this for a profitable trading strategy. So as we can see, these deviation bands here, this red and this green band, are deviations based on the active address percentage change for Bitcoin. So if the active addresses are increasing, these lines will increase. And if there's very volatile changes in the addresses, then these bands will deviate and become a little wider. And then this orange line is simply the 28-day price change in percentage terms for Bitcoin. And once we overlay them, it actually gives a pretty good indication of what Bitcoin might do next. So as we can see, if we just look at this 28-day price change percentage line, this orange line here, once this crosses this upper red deviation band, actually marked a gray area to potentially take a short position on Bitcoin and bet on the price decreasing in the short term. Now, this would have been a very profitable trade. And again, if we just did this multiple times during this bear market we've had here, every time this 28-day price change crossed above this upper red band and dipped back beneath it, this was a great opportunity to take a short position on Bitcoin's price. Now, obviously, taking long positions during a bear market is a little more difficult, but if we zoom out a little bit here and zoom in on the previous bull cycle we had here, the same strategy could be applied, but for long positions. Every time we dipped beneath this green lower band and crossed back above it, this was a great long entry for a short to medium term trade on Bitcoin's price action. And especially if you're taking into consideration crosses on both ends. So if you were, for example, longing as Bitcoin crossed above this lower green band and taking profit as it crossed back beneath this red band, this would have been a fairly profitable trading strategy. And especially if you implemented this alongside something like the advanced NVT signal, which also gives fairly frequent signals for more short to medium term trading. Now, the advanced NVT signal is looking at the market cap of Bitcoin divided by the volume. And this advanced one is taking into account the 90-day average of the daily transactional volume of Bitcoin. So rather than just taking into account exchange volume, which may be comprised of derivatives and don't truly reflect the current interest in Bitcoin, this is taking into account on-chain network volume. So we get a more accurate representation of what is actually being conducted on the Bitcoin blockchain and how this fundamental data may actually react to price. And again, we can implement a very similar strategy for this advanced NVT signal tool. If we just zoom in on the previous cycle we've had, if you were to long Bitcoin again on the crosses of these lower deviation bands, for example, this solid minus 1.2 deviation, or this dashed minus 0.5 deviation from the average, you can see taking long positions on these signals would have been a very profitable tool during the bull cycle. And then if you were to take profit on the bearish crosses of these upper deviation bands, again, this would have been a great area to be taking profit during the bull cycle. And we can also do something similar during this bear cycle. If you were to take short positions every time the advanced NVT signal crossed beneath one of these deviation lines and then take profit again once it had actually crossed back above one of the lines, very profitable and very simple trading strategy that you could have implemented during the bear cycle to try and maximize your returns. And of course, this doesn't have to be used purely for short to mid-term intra-cycle trading. You could use this alongside your longer-term on-chain metrics to try and just maximize the risk-adjusted returns of your entries for your long-term holds. For example, rather than just blindly buying based on when one of the longer-term market cycle charts is flashing a buy signal, you could wait until one of these shorter-term on-chain charts, such as the advanced NVT signal, or the active address sentiment indicator, again, also flashed a buy signal. So then you have the confluence of two separate indicators working on two separate timeframes to give you confidence that the position you are taking has the highest risk to reward possible. So just to summarize, using on-chain metrics for short-term trading in Bitcoin is definitely not the most common method of the implementation of these tools, but it can be incredibly effective. And this can actually give an accurate representation of the more fundamental value of Bitcoin rather than just the speculation and volatility that happens on a day-to-day basis. But keep in mind, frequent trading can result in considerably higher trading costs, more trade management, which could lead to higher stress as you're having to manage more open positions, and it may not even be as profitable. Before you implement any short-term trading strategies such as these, do your own research, do some backtesting, and make sure it is right for you personally. If you liked this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live charts, in-depth newsletters, indicator alerts, private trading view scripts, and more, all for a fraction of the standard industry price. And especially those trading view scripts and private indicator alerts definitely will help with your short-term trading, so I can definitely recommend becoming a site subscriber if that is your main interest in Bitcoin trading. Of course, let me know in the comments down below what your thoughts are on this strategy. Thank you very much for watching, and I'll see you in the next one.